Hi, Aaron. Thank you very much for joining us today. How are you?
I'm well, thanks. Are you okay, Gabby?
I am, yeah, I'm fantastic. Thank you. I'm good. Looking forward to this chat. I think I mentioned earlier I have an interest in what you have to say with these questions, as I'm sure a lot of our listeners and watchers will as well. So we're going to be talking about mortgages, which is obviously in the headlines a lot these days. What's going to happen? What's happening to interest rates? What's happening to inflation? So there's a lot of question marks surrounding mortgages, what that means for people and their finances. So, I mean, could you start with just letting us know what are the key challenges at the moment when it comes to mortgages?
I think one of the biggest challenges is market uncertainty, Gabby. At the end of May, we had around about 800 mortgage deals that were being pulled by lenders because of uncertainty over what's going to happen with interest rates. That's about 10% of the mortgage market. So it's uncertainty is kind of one of the biggest challenges certainly at present.
And what can people kind of expect in the future? I mean, I know you said there's a lot of uncertainty surrounding it, but I mean, what can they do at the moment to kind of reduce the potential impact on their finances, or kind of prepare for the worst, if you will?
I think starting to plan is one of the biggest things that someone can do. Not to put your head in the sand, to kind of make sure that you speak to someone and you're aware of what those rates are likely to be when you come around to renew mortgages. We've had sort of 12 consecutive interest rate rises over the course
Yeah.
of the last 12 months, and that's purely down to the fact that they're trying to get inflation under control. But it's been, I can't sugarcoat it. It's been bad news for people, really. On top of everything else in terms of the cost of living crisis, it's kind of another thing to add to it. But certainly planning is something that people can start to do to get on top of this.
Yeah. I mean, I think it'd be quite good to lay out the types of mortgages that are available, the differences. I mean, I think most people have a general idea of what they are, but it'd be good just to have those kind of laid out from you. Like, what kind of mortgages are there?
The two main types are fixed rate mortgages and variable rate mortgages. So a fixed rate mortgage, as the name suggests, the interest rate is fixed for the term of that fixed rate deal. So your mortgage payments don't change over that period. Great if you're looking to budget. It gives you that certainty. Perhaps not so good if you're after more flexibility, Gabby. So
Yeah.
if you've got people out there who want certainty, fixed rates work, but variable rate mortgages, as the name suggests, if interest rates go up, your payment could increase. If interest rates come down, your payment could decrease. So they're a bit more of a gamble, but they might give you a little bit more flexibility as well if you're looking to perhaps make significant overpayments on a mortgage, perhaps, or
Uh-huh.
come out of a deal early. Those sorts of things can yeah, be in the favour of a variable rate
Yeah,
mortgage.
for sure, for sure. So there's a number of pros and cons, I guess, for either side. I
Yeah.
mean, what are what patterns are you seeing at the moment then when it comes to people remortgaging or taking out a mortgage? What kind of behaviours are you seeing?
I'm seeing more people looking at 5-year fixed rate mortgages actually, Gabby.
Okay.
In more recent times, when I've looked for clients, the 2-year deals, let's say we kind of go back 24 months, the 2-year fixed rate deals, for example, will be cheaper than a 5-year fixed rate deal.
Yeah.
At present, we're seeing kind of the inverse. A 5-year fixed rate deal is cheaper than a 2-year fixed rate deal, and often, we're all driven by the same thing. I think in many respects, it's kind of making sure our outgoings are as reduced as possible, and that's driving more and more people towards fixed rate deals, which at present are quite a bit higher than they were 2 years ago.
Yeah. Yeah. I think it's a lot has changed over the last couple of years. I was having a conversation with somebody the other day where they said they're actually very fortunate. One of those people who fixed for 5 years a few years back, and I think their interest rate on their mortgage is something like 1.2% or
Wow. Yeah.
1.5% or something like that. I think,
Yeah.
wow, yeah, it's a huge difference in comparison to where things are at now. Um, so what would your advice be to those who may feel a little bit unsure of what the next steps are to take? You know, you've laid out there some pros and cons of each type of mortgage. You've said you need to plan. What if people are feeling quite nervous about this? What would you advise people do?
I would certainly advise people to start to think about their options. There's quite a few levers you can start to pull when it comes to
Uh-huh.
mortgages. So one of those might be the term of the mortgage. If affordability is going to be a big issue for a client, what I would look at is perhaps stretching the term on the mortgage. Now, it's not a perfect solution because it means that you are going to pay more interest over the term of that mortgage.
Yeah.
But it might mean that your payments on a monthly basis can kind of fit in with your budget. So there's options like that, but also looking at, your wider financial planning. So looking at, are you on the best deals when it comes to, I know it's just kind of like a hot topic as well, but things like energy costs.
Yes. Yeah.
Are there outgoings that you have which you could trim to kind of help with budgeting? Are there ways to kind of perhaps make your income stretch further? Obviously, dentists, there might be options to kind of pick up extra days or
Yeah.
different things that can be done to kind of help with affordability when it comes to not only mortgages but just in general.
Yeah, no, that's all important things to consider, I think. I mean, what about when it comes to commercial property? Are there different challenges when thinking about that area? Is it does it come with some other challenges that you wouldn't expect with residential mortgages?
I think with commercial mortgages you'll probably tend to find that, again, rates will be higher than they have been. I'll often see kind of with commercial mortgages, clients will often go with their main bank or the bank that perhaps they initially bought a practice with.
Yeah.
So that there are still options to shop around. I would suggest that rather than just being tied to perhaps the one bank, that you do start to look at your options and perhaps speak to commercial brokers who can look at these areas and see whether there are better options. Some banks are actually looking to kind of offload lending books, so they'll actually give quite favourable offerings to their existing client bank to move to another bank. They just don't want to be exposed to risk. So, these are things that it's worth looking to explore in order to kind of save money on a monthly basis, Gabby.
Yeah, absolutely. I'm going to throw a quite difficult question at you now. I know nobody knows what the future is going to be, but I mean, I think there's a lot of doom and gloom surrounding this topic at the moment. Understandably, things aren't easy at the moment financially for all sorts of reasons. But I mean, is there any glimmer of hope that you can see, looking ahead, maybe not just 6 months, but 12, 24, 36? Is there anything that people can kind of look forward to in the future?
Well, I mean, if anyone's got enough time on their hands, they can read the MPC minutes. So the Monetary Policy Committee kind of set interest rates. They're a panel, in effect, and they publish their minutes.
Yep.
So you can read those. And I think certainly over the last few months we've seen inflation starting to kind of to reduce. And the talk had been that they were looking at perhaps interest rates starting to fall. I think the fact that a 2-year fixed rate is a higher interest rate at present than a 5-year fixed rate suggests that over the medium to longer term, there is that expectation that interest rates might start to fall. But obviously we haven't got a crystal ball. We can't say for definite what will happen. And I think a lot of it will depend upon supply chain issues, political events, our own kind of monetary policy as a country, kind of decisions we make in budgets, which certainly had a big impact September, October last year on interest rates now.
Okay. All right, well, thank you very much. Is there anything you'd like to add that you feel we've missed or haven't covered or dental professionals could benefit from?
I think for dental professionals, I think specifically you're looking at, occasionally you can have quite complex income structures. You might have clients who are operating as sole traders, some might have limited companies, some may have just moved across from one to another. It's just important to kind of make sure that your record keeping's up to date, that your accounts are up to date, that speak to somebody who understands dentistry. There are lenders out there who love dentists simply because they're seen as being a safe bet.
Yeah.
So the great thing is we can kind of look to kind of match clients like that with the right lender. So yeah, just making sure that the bookkeeping is definitely up to date.
Perfect. Thank you very much for your time today.
No problem, Gabby. Thank you.